Hello, everybody. Taylor Johnson here, giving you a look at the April real estate statistics for the Washington, D.C. metro area. And as you can see, we've got some numbers here that are change up and down. So sales are down. Median sales price for the region is down. But a lot of that is actually due to a few specific markets adding into the average and bringing the average down. Days on market is up 1 day to 7, so it's still pretty low. That means a home is going to sell in about a day. Something like 68%, 80% of the homes on the market are sold within a month. So we're still in a very tight market. We see here, this is a key number for me, that new listings are down 44%. So with new listings down 44%, the market is really, really tight. This is from last year, 44% down from this time last year. And the months of supply, now a balanced market is 6 months. Anything less than 3 months of supply is a very, very tight market. And look where we are. We're at 1.1. It's interesting, right? The number is an increase of nearly 35%, and it's still at 1.1. So what this means is it's a very, very tight market, and anybody who's in the market right now is likely to find that homes go quickly and or there's competition to buy them. Typically, we see a spring boost, which we are not seeing much of yet because interest rates are still pricing a fair number of people out of the market, I guess you could say, though the rates are around 6.5, and they've stabilized there. And that's probably where they're going to be for a long time. People are slow to come back into the market. And we can see that for months, inventory in the D area had been rising, but the number of active listings fell in April. Supply in the region is less than half of what it was before the pandemic. Think about that. Do you think the population in this area is less than half of what it was before the pandemic? Probably not. In fact, I think you would find that the population has actually increased in the last 3 years. So to think that the supply of homes for sale now is less than half of what it was, with more people wanting homes, we've got a big problem, right? And this is sort of the fundamental underlying structural issue with the market right now. And we can see here that the home index is actually up from last month. It's at around 87 to 90 it's at 90 now, up 87 from 87 last month, though it is down from last year. Now, last spring was a really hot market. It was crazy. This was before the interest rates adjusted. And it was like a feeding frenzy. People were out there like crazy. And the buyer index was around 120, 127. So right now, if you're in the market, it's actually a reasonable time because the demand index is comfortable, but still we have some ability to negotiate. It's not, you have a little bit of time to think, maybe. And instead of 20 offers, we're seeing 9 offers. So it's slightly better than what it was. The spring market is slower than typical. Inventory still makes the market feel competitive to buyers. I have somebody put in an offer last week. There were 9 other offers on that property. Several factors drive the market. As a result, housing affordability will still be a challenge, particularly for first-time home buyers. Inventory has tightened this spring, but could loosen. I don't believe that, as more homeowners compelled, but inventory still will be constrained. Home sales were up just slightly. There's bigger monthly gains among single-family homes, though the pace of condo sales was down slightly from typical sales last year. And the median sales price declined year over year for the second month in a row, but it's only about 1%. We are off maybe 10% off the peak prices of last year. But again, we have a structural imbalance. Supply is very, very low. Demand is steady and strong, and that over time is going to support these prices and maybe over time push them higher. Prices are moving up a little bit seasonally. The mix of homes sold will continue to impact overall median price. Days on the market reflects competitiveness, and the pace is quick as buyers clamor for limited inventory. New pending sales carried largely by detached single-family homes, the only property type with month-to-month growth, up 7.4%. Active listings, here's the key. Active listings are actually down over what they were a year ago. Supply of single-family homes increased. Inventory is only 35% of 2019 levels. 35% of 2019 levels. Let me rephrase that. That means we have 65% fewer homes for sale than in 2019. Inventory of attached condos and townhomes at 56% and 75% of 2019 levels. So condos are in a better boat if that's where you're looking. There's more inventory, what we're saying here. Showings are about flat. And then in local markets, we can see here that closed sales vary, but it's generally down across the region. And again, if there's fewer homes to sell, there are going to be fewer selling. So that makes sense. But the sales price here. So Alexandria City, Arlington County, Fairfax City have had a modest increase in median price, while Falls Church City, those of you who've been following me know that Falls Church City is an aberration. We want to be sure to remember that. If we look up here, Falls Church City had 13 sales. One sale at a lower price can have a big effect on that average. So Falls Church City isn't really a true indicator for us. Frederick County was down, Loudoun County down, Montgomery County and PG County were both up in their median sales prices. DC was down, so your average for the area is 1.5. So if you're looking for areas to shop that are maybe sort of relative bargains, DC looks like it's one of those. Frederick and Loudoun County also are in. We'll leave Falls Church City out of it. And then local markets, again, meeting days in the market are really, really quick. Homes are selling, if they're well priced and they present well, they're gone. You don't have a lot of time. Here's, again, is the key, new listings compared to April of last year. We are down 50%, down 40%, down 50%, 50%, 50%, 40, 30% from last year for a metro region average of down 44% from last year. New listings. And again, remember, in comparison to 2019, we are down 75%. That is crazy to think about. Months of supply, here we are again. 6 months is a balanced market. Anything less than 3 months is a tight market. And look at what we have here. We are in a tight market everywhere, with DC being sort of the best of those markets. There have been modest Year-over-year declines in median price, but despite that, there are no expectations that prices will fall significantly. The key reason, as I've been saying here, is there's a very low supply. There's just no homes for sale, and yet the buyers who are in the market are still competing for limited homes for sale. There are enough buyers in the market who've been shut out by higher interest rates. Until more supply, prices will not come down in any meaningful way. So if you can imagine, if you're somebody who's saying you're going to wait for interest rates to drop, what's going to happen to the market when interest rates drop if we continue to have this kind of supply? We're going to have more people pumping into the market, and then it's going to become even more competitive, and that's going to push the prices up. And you're going to hear stories again of people selling their homes, or rather buying the homes, at prices significantly above list price. And that is not really something you want to be involved in with a buyer. If you can buy now, it's really a better time. And so here's the home demand index. Again, this is compared to last spring, which was a really, really hot market. But compared to last month, the numbers are higher. So that means there are more buyers in the market in April than there were in March. My name is Taylor Johnson. I'm an agent with Keller Williams Capital Properties, part of the Eng Garcia team. And I'm here to be a resource for you. If I can answer any questions for you, share the whole report with you, help you interpret what it means, or help you buy or sell a house, please give me a call, and I'd be happy to share some resources with you. Thanks very much for watching. Have a wonderful day.